Welcome back, everybody. Sive is here with the ForexPeaceArmy.com. It's with our daily update on euro currency. So speaking shortly, we're actually happy with the things that we see because market accurately follows to the trading plan that we discussed on the weekend when we mentioned bullish grabber on the weekly chart and suggest that sooner rather than later, but market should complete the 119 area where stands the big monthly target. So today we just take a look what changes we have since yesterday, some tricky moments. So today report totally dedicated to current technical situation and discussing where we potentially could consider taking the position. So first of all, starting on the daily chart, you could see the market starts flirting with the May City line. And potentially, just by our common view that it's might be the source of the pairing of the bearish grabber. The problem with this situation is that daily grabber, if it will be formed, so to get the market should close below the red line, will have the minimum target just below these lows. But it automatically will mean that weekly grabber has to be erased because these lows are particularly the invalidation point of the weekly pattern. And how we could resolve this contradiction? It resolved usually in two ways. First, weekly pattern is always stronger and more important than the daily. Second, you have to take into consideration the previous performance, where and in what circumstances you got this grabber. And if you carefully will take a look at it, especially on intraday charts, we will show it later, you will see that this grabber has low chances as to be formed, as to work properly, because the whole upper direction here that you see shows great, healthy, bullish signs. So that's what about this grabber. Still, sometimes exceptions happen, and this is market, so everything could happen. We will keep an eye on, but let's first wait whether it will be formed at all. Tomorrow in the morning, we will return back to this question. Maybe we will not even get it if market will just return back and keep going higher. So that's what about this tricky moment that we have on the daily. Now, what we have on intraday charts. On the 4-time frame chart, performance stands absolutely outstanding. Market, as you can see, even shown no reaction on the 618 level and the ABCD, this local ABCD completion point. It just break through the top, which is great sign. You do not have yet some sharp downside reversal, which means that breakout out of this range now seems to be real. So it's not the fake breakout. The one thing that we do not want to see with all this stuff is market return back below this area. So down inside of this range, dropping, erasing this small stressing rally, we do not want to see it. Otherwise, the overall bullish tendency and breakout here will be under question. And in this case, if it will happen, we definitely are getting the bearish grabber on the daily chart, which will be supported by the overall bearish performance on intraday charts, weakness of the market. That's the core of the current situation. So just keep it in mind, and you easily will make the conclusions, prepare the trading plan. It will be easy to trade because you know what you would like to see, and you know what you do not want to like to see. So that's what we have here. Correspondingly, on the hourly chart, we should keep an eye on an area around 117, 117.10. Why? Because this is confluence support, rather strong support here. And take a look, this is natural area. This is also, you can see, was resistance, resistance, resistance. Now it will be support. Maybe here we will get some kind of the ABCD patching down. That's easily could happen. That's great. If we will get it, maybe even 1618 extension will be slightly around 117 area. It's okay. But we do not want to see this downside breakout, and especially if market drops below 1680 lows with the raising of this most recent rally, that will be bad sign. So that led us to create a trading plan. For a long position taking, we are watching for this area. Stops might be placed either on the confluence, or if you would like to place it at absolute invalidation point, it's better to hide it below 1618, at least at the first 1680, at least at the first touch of this confluence, when the market's still standing around it. Later, when the market will start upward direction, you could move to the break-even or closer to the confluence area. But speaking about pure bullish price shape, it will be great if market will not break the conference area down. That will be absolutely good for bullish scenario that we have here. Next upside target here will be nearest one, stands around 118. This will be XOP, the same ABCD pattern here. So that ends towards what we have currently on the market.